2023 was actually a strong year for performance for Alliance Trust. Total shareholder return was 20.2% versus the MSCI All Country World Index return of 15.3%, so around 5% outperformance over the year. Now, whilst gratifying, we care more about the long-term performance of the trust, and what's particularly pleasing to see is that the 3 and 5 year numbers are now looking strong, both relative to that index benchmark but also relative to the investment trust peer group and indeed the wider open-ended fund benchmark as well. So we always try and make sure, first and foremost, that the key driver of returns over any year is stock selection. And it was pleasing to see that that was the case through 2023. And that was good stock selection within each country and sectors. It wasn't just in one particular area. Whilst the Magnificent Seven very much drove markets in 2023, you saw that over 50% of the returns on the index came from the Magnificent Seven. It was less of a factor in our outcomes. So about a third of our returns came from the Magnificent Seven. So we were overweight a couple of stocks in that place that did very well for us, like Amazon and Alphabet in particular, but we were particularly underweight a couple of stocks like Apple and Tesla. So it wasn't really just the Magnificent Seven that drove our returns at all, which was pleasing to see. So returns came from a wide number of stocks, as you would expect in the way we balance the portfolio. So examples would include Petrobras that did particularly well, or Mercado Libre, so Petrobras being the energy stock in Brazil, and Mercado Libre being a Latin American online marketplace, essentially. So we're always making some changes to the weightings between the managers in the portfolio. We really tend to take profits from those managers that have done particularly well, and we tend to add to those managers where nothing has really changed, but they haven't yet had strong performance in the short term. But actually probably the biggest change that we saw over 2023 was that we introduced a new manager, which is Dalton. And they came in July 2023. They're a bit different from some of the other managers in that they're a Japanese specialist. So like the others, they're giving us their 20 best ideas, but here they are focused on the Japanese market. Now, the reason we thought that was an interesting thing to bring in was because of some of the changes that are happening in Japan that lead us to think that's a fantastic opportunity for alpha, some stock selection alpha in particular. And that's really where in Japan, there's a lot of pressure from the stock exchange for companies to explain why they've got a price to book value below 1, for example, and what they're doing with cash on their balance sheets to do something about that. And so a manager like Dalton, who's understood the Japanese market for many years and goes down the capitalization spectrum and will invest in the companies that will benefit from these changes, really looks an attractive proposition for us. Overall, we're very excited about the opportunities in 2024. As we talk to each of the stock pickers in the portfolio about their holdings, they're really excited that a number of them have been delivering on the fundamental side, so they've been delivering better earnings than necessarily was expected, and that hasn't always yet come through in share price appreciation. And so there's lots of latent value in our view in the portfolio from a bottom-up perspective. Now, although we are excited about that, we do recognise that equity markets have had a very strong positive run for a number of years. And so we're also a little bit cautious at the top-down perspective. And so our gearing levels in the trust are at the lower end of where they would typically be. But that said, very excited from a bottom-up perspective. So last year we saw an increase in the dividend of 5% relative to the previous year. That now brings us to 57 consecutive years of dividend increases, and something that the board of the trust will want to continue, I'm sure, for a number of years to come.